Hi, Hugh Lopdell here from Oak Park Chartered Accountants. In this video I give my view of the business environment 2 weeks into level 1. I cover the 7 main risks for businesses making a healthy recovery in the coming months, and I update you on the government COVID assistance for businesses and what opportunities there are in there for you. We have a lot of pharmacists that tune into our videos from around the country, so I'll make mention in this video of certain things that are specific to pharmacies. Okay, so where are we at now? As I tape this, we are 2.5 weeks into level 1 in New Zealand. Some things have returned to normal pre-COVID levels. A few things are better. Some behaviours have changed, perhaps permanently, and some things it's too early to tell. But in amongst all that, there are some opportunities, and I'll tell you about those as we go along. So, welcome to level 1. It is good, isn't it? My observation is that for most, the bounce back economically is quicker and better than expected. People's caution about catching COVID from one another appears to be more than outweighed by their keenness to return to normal, unrestricted activities, and critically for business, to normal spending. The huge crowds at Super Rugby games are an indicator of this keenness. Traffic jams are back. Now, I never thought I'd see the day when I was pleased to see a traffic jam again, but I am. It's a good sign for businesses eagerly awaiting the return of normal activity, and particularly retailers. It's also good for healthcare and perhaps panel beaters. There are more injuries from car accidents, sports back, so there's more sporting injuries. And government funding for elective surgery means busier medical centres, EDs at hospitals, and that will help pharmacies, particularly those closely connected to a medical centre. We have a number of truckie clients at Oak Park who contract a mainframe, and they are flat out working 6 days a week. Now, Cam Bagri, years ago when he was at ANZ, dreamed up an ingenious way of forecasting economic activity, and it was to sample measure truck volumes on New Zealand roads. Now, volumes of heavy trucks in particular have proven to have a strong real-time correlation to GDP. So I had a look online at the ANZ truckometer for June 2020, and it shows heavy truck volumes at 100% of last year's volumes at the same time last year. And now, while there may be some catch-up involved in those truck numbers, it is certainly a very healthy sign. So be encouraged by that. If you want to look at it, just Google ANZ truckometer and you can read the latest survey. The economic recovery. How soon will your business see a consistent return to pre-COVID business activity? The answer, I believe, depends on which industry you're in and how affected your customers are by COVID. Your business, be it a pharmacy or any business, will be adversely affected, I believe, only if any of the following apply to you. 1, that your retail business is in the city and your city still has a reasonable portion of its workers working from home. I congratulate the Cabinet for asking the State Services Commissioner to instruct government departments to get their workers back into their CBD offices. I note, however, that 2 weeks down the track, it still only takes me 15 minutes to get into work, and it's normally 35. So we've got a wee way to go. Hopefully that'll get back to normal soon for the sake of those inner city retailers, including pharmacies. So that's one. Secondly, if too many of your customers have lost their jobs or lost their businesses, that will adversely affect your recovery. 3, if you're a pharmacy, that your medical centre is yet to return to normal activity. 4, you'll be adversely affected if you're an exporter or if you service the export industry, and that export market is suffering loss of demand in its overseas market. 5, if there's a permanent change in the buying habits of your customers, for example, working from home, or working from home a lot more, or buying a lot more permanently online than they used to. 6, if you're in tourism, or many of your customers are in tourism, or your city generates a lot of its income from tourism, you'll be adversely affected in this recovery. And 7, if you're in a stressed industry such as media, including print and TV, or you service such an industry. These industries, unlike tourism, were stressed before COVID, are even more stressed now, and there are some unpleasant times ahead yet, I think, for media and other industries like it. The good news is, if none of these things apply to you, I believe you can have a good amount of confidence about your business and the road ahead. I hope you're in that group. Buyer behavior. Now, there are some changes in buyer behavior, and you'll all be aware of this. Appreciating this, though, can help you identify opportunities for your business. Demand for petrol around the world is way down. Planes are not flying, cars are not really driving in a lot of countries. So petrol is cheaper, and the road trips are cheaper. Folk want to keep it local and support their local businesses more than before. People have been in lockdown and appear to be spending money on items to improve their quality of living at home. New beds are selling well. Home swimming pools are selling well. If you sell quality home goods and services, there is probably an opportunity in there for you. People are hand sanitizing and coughing into their elbows, so not passing on colds and flus as much, so that's a negative for pharmacies. But on the positive side for pharmacies, people have never appreciated the health expertise of their local pharmacies so much, and have a heightened appreciation of the importance of prevention. So there are opportunities there to sell certain items. Employees have enjoyed working from home, and if their boss allows them, will stay working from home. That gives suburban retailers an opportunity to appeal to and retain some of these new customers. Under lockdown, many people tried online shopping for the first time and got a taste for it. So retailers with e-commerce available have definitely had an advantage. Okay, so I'll give you an update now on COVID government assistance. First of all, the low value asset 100% deductibility. Now remember that the $500 low value asset threshold has been raised to $5,000, that's plus GST, for a year from the 17th of March 2020 as a COVID cash flow assistance measure. It means any asset bought by a business up to $5,000 in the year to 16 March 2021 can be expensed in full instead of being depreciated. We had a pharmacy buy a delivery van for $4,800 plus GST. New computers, new equipment, new plant, even a small fit out under $5,000 would qualify. All right, the $200 tax write-off. Now, IRD will write off any tax payable up to $200 for the 2020 tax year. Previously, this limit was $50. It's not a biggie, but your accountant can take advantage of this for you, and every little bit helps, right? Now, pharmacy. The government announced in the budget that $18 million is to be paid to critical community pharmacies. No detail is available yet, but the press release refers to pharmacies serving small communities. Pharmacists I know are eagerly awaiting to know which pharmacies are included. Our discussions with pharmacies show most suburban and rural pharmacies are, if anything, a bit busier than normal. It's the city, urgent and more pharmacies that have done it tough. So we hope that this need is recognised by the Ministry of Health. Watch this space. Apprenticeship assistance. Now, in the budget, the government announced that they will fund employers to train apprentices from August 2020. So businesses will receive $1,000 a month for 20 months for eligible apprenticeships. Pharmacy interns, for example, may be included in this assistance, but details have yet to be released. So watch this space. If you want to Google it, Google Apprenticeship Boost, and you'll see what is available there. Mortgage holidays. Now remember, if your business was funded by a mortgage, you were able to, and you may have received a 6-month interest and principal holiday. You can cease that earlier than the 6 months if you no longer have need of it. And I would suggest to you do, or do consider it. Talk to your accountant. You don't have to run out the whole 6 months. Okay, now the wage subsidy. Wage Subsidy 1 expired on the 10th of June, and it's without doubt been the government's main success story out of the range of economic measures they rolled out. It was very costly, but it was very effective at keeping most businesses from going under. So I'm sure if Treasury did a cost-benefit analysis of the measure, it would stack up well. So that's heartening. Now, if you claimed the wage subsidy, you were required to keep your staff employed for 12 weeks up till the 10th of June. If you did claim the subsidy and you now need to downsize, you can do that without repaying the subsidy for those staff you will let go. I have no non-pharmacy clients that I'm aware claimed the wage subsidy in error. However, most suburban pharmacies I know who claimed the wage subsidy have realised with hindsight they did so in error. I'm advising Oak Park pharmacy clients who are in that boat to aim to repay it by the end of July. There will be government audits. There is no deadline on the website saying when incorrect claims must be repaid by. If you were able to return to work early, say construction businesses could return under level 3, and therefore you really only needed 7 weeks of subsidy, but you received the full 12, you do not need to repay the wage subsidy. As you'll all know, the wage subsidy extension is now available until the 1st of September, and it provides 8 weeks further assistance to keep your staff employed if you can show your turnover is down 40%. It otherwise has the same criteria in terms as the first wage subsidy. It's paid up front, it's paid at the same full-time and part-time rates, and you must keep your staff employed until 1 September this year. You can use May's turnover compared with the previous May, and that is what most have done. If you are a pharmacy and you don't know which reports to print to get that May figure, email me and I'll tell you. My email follows at the end of this video. So the government has clarified that while the wage subsidy is non-taxable for employees, it is taxable if it's claimed for shareholder employees and for self-employed people. Your accountant will be aware of this. Okay, you'll remember the Small Business Cash Flow Loan Scheme. I covered this in an earlier video. The government extended the time to apply for this until the 24th of July 2020, so you have 1 more month. To recap, the government will lend $10,000 plus $1,800 per FTE staff member for businesses who qualified for the original wage subsidy. That was 30% drop in turnover on last year. And businesses who also have less than 50 employees, or their group of businesses have less than 50 employees in total. So say you're a pharmacy group with 3 or more pharmacies, you could well have in excess of 50 staff, so you can't claim it for any of the pharmacies in that group. The loans are interest-free if repaid within a year, and no repayments are required in the first 2 years. All right, I hope you've been able to absorb all that. That's all I've got for this time round. If you have any questions on any of that, you can email me. My email address is coming up next. All from me, Hugh Lopdell from Oak Park Chartered Accountants, signing off.